Hello Wildcats. Today we are going to buy a call option in a Fidelity account. To do that, you first need to have approval for options trading. If you don't know how to do that, check my last video. I go through the process myself, opening a new account, and the information I put in allowed me to get approved for options trading. And you will receive this email once you have been approved. Now that I'm allowed to buy calls in this account, I'm just going to log into my account. I believe I'm already logged in, which is true. And then I can go up to the top left where it says accounts and trades. Hover over that and scroll down to trade. Click trade. You will see this page. At the top left here, you're going to see trade stocks/ETFs. Click on that. You're going to have this option, options. Click on that. You will be brought to a different page. Make this bigger. All right. So I haven't put money in this account yet. As you can see, everything's $0. But hopefully you have money in your account and you'll see how much you have in terms of buying power, so you know how many options you can buy or what types of options you can buy after you fill in this stuff below. Underlying is the first thing we need to fill in. That is simply the ticker for the call you want to buy. I've been trading oil upward. I've been trading Chevron actually. Chevron's ticker is CVX. I've been trading this strategy where I calculated this pattern where CVX moves pretty well overnight. So I've been buying calls at the end, at the bell, and then I've been either holding them during the day or just selling them at the open. My strategy actually says statistically the best way to do it is selling that at the open. So I've been making I've been buying like a couple contracts per day and making about $200 per day just trading this strategy. So that's what I want to do again. So I put in my ticker and I want to buy to open. Now these other options you have, I should use the word choice I guess when I'm talking about options. These other choices you have, first of all, you should ignore these two middle ones if you're just buying calls. Whenever you actually buy the call, you need to select buy to open. Now, when you're done trading it, when let's say a couple of days go by and you want to sell it, always select sell to close. When you start the position, you open it. When you close the position, when you finish the position, you close it. So always select buy to open to buy a call, and then sell to close to sell that call once you're done with the trade. So I'm going to select buy to open here. I'm just going to mimic the trade I made yesterday. I'm going to buy 2 of these. I'm kind of high risk, so I select the weekly expiration. Of course, you go further, they're going to be more expensive, but you have more time to realize whatever your investment or trading strategy is, your price target or whatever you're doing. So I selected my weekly expiration, and yesterday I bought the 106, so I'll just do that again. And we're doing calls. Now, on the right, you'll see add leg. Add leg is just in case you want to buy a different thing, but with the same ticker. You have to use the same ticker to buy 2 at a time. So, for example, maybe you want to buy a different call. Maybe you want to buy a call with a different expiration and a different strike. You could do both of those at the same time in one trade order. Or if you wanted to say, maybe you wanted to buy a put instead, so you'd have sort of if you buy the same amount, you'd have like a straddle or strangle, where if the stock goes up, you make money. If the stock goes down, you make money. Of course, that's more complex. That's not what we're doing today. So I'm just going to remove this leg, but it's useful to know you can just keep adding legs to make more complex strategies. And I'll remove that leg, so we're left with what I just put in here. Action, buy to open, quantity, the number of options you want, expiration, when those options expire, strike. You can check if your option is in the money, your call option is in the money or out of the money based on whether the strike is below or above the last price of that stock, respectively. Call put, of course, you know what that means. So I'm buying 106 strikes with the expiration to March 12. These options are in the money because the strike price is lower than the stock price. And down here we're going to have a bit more information. Just going to double check. This is the expiration I want, this is the strike price I want, and it's a call. That's all okay. Don't make a mistake. Always double check this place. Alright, this is the last price of the call option you want to buy. Now, it says $3.50. The truth is it's $380 because you always need to multiply this value by 100. The reason is that call contract you're buying gives you the rights to buy 100 shares of this. So you multiply the price per share by 100. That's the actual price you're going to pay. So this is going to cost me about $380. But that's not exactly true, and I'll show you in a minute why. This last simply means the last price at which that option was bought. The last person who bought this option paid this much. Change you could ignore, but basically it means it's $2 more expensive than, I don't know what they're comparing it to here, but generally one day. Bid size and ask size, these are the number of people who want to buy this option. So there's 20 who want to buy this option right now, and there's 36 who want to sell right now. This generally tells you, the size of this generally tells you how easy it is to get your trade filled. The higher the better. Now, the bid and asks is the spread. It's like an auction. What you're doing is you're trying to, when you're buying a call option, you're trying to get as close to the bid as you can. If you don't, you're going to be paying higher price than you would usually want. So these 36 people who are trying to sell the option, they want $4.05 or $405 for the option. And the people who are buying it, they're saying, I want to pay $370 for the option. Now, in a minute, this will become more important, but let's fill in the rest for now. So, route, right. Route you can ignore, just auto. Route is if you have a specific exchange on which you want to go through to make this trade. Basically, you're not going to use this. All right, order type. So this part's important, and this is where the bid and ask come into play. If you choose market, you're going to get the worst possible price. You're going to get this ask price right here. So you're going to be paying $405. You don't want to do that. You want to get the best possible price you can. So you're going to select limit, and a limit price is going to pop up. Now, if you put in the lowest possible price, you'll be with these bidders. And you're not going to get your order filled unless the stock takes a little dip. But it's possible you'll get your order filled if you go a little bit above the bid. And the safest for getting your option filled without paying too much is calculate the midpoint and then round down 5 cents or whatever. So you might do like $3.95 if you want to get it filled right away. But my general strategy is I go 5 cents above the bid. I put in the order. If it doesn't get filled, I'll change by 5 cents, and I'll just keep going up until I reach around the midpoint. Sometimes you have to keep going up to the ask. That's not common though. So what I'm going to do is I'm just going to do my first little order here, $5 above the bid, 5 cents above the bid price, right? And even though you're paying $375, always type it always divide by 100 when you type it in. Type it just as the bid and the ask are written here. So time in force, this is not usually important. You could just stick with day. If you don't, you're buying the option now because you have a trade you want to enter now. So you're going to get it filled based on this limit price, not based on the time. So I'd just say leave it as day. Conditions, all or none. All right, so maybe you really, really want to buy 2 call options and you cannot accept buying just one. Well, then you're going to have to choose all or none for conditions. I don't usually choose this. I just go with none because it's pretty rare, not super rare, but it's pretty rare that you only are able to buy one. Only one bidder or only one person asking, one seller of the option can accept this price, but that happens sometimes. So if it's really important for you to get two, choose all or none. If you don't really care, you're just trying to buy the options at the right price, you can choose none. Sometimes you get one filled and you want to buy another one, well, you just enter another order. You cancel that outstanding order, you enter another order. So I'm going to go with no conditions, trade type, cash. I'm going to use my cash, and preview order and go through. So this is my first time doing it on Fidelity. This is all pretty standard. So I'm going to preview the order. You can ignore this stuff here, I think. Well, actually, no, you can't, because this is the price you're going to pay, total. This is your total price. So we put in the limit price, and we put in the quantity, and here it's just going to calculate for us how much this will cost us. That's the max loss for buying a call option. So preview order, and yeah, I can't do it because I don't have any money in my account. But that's pretty much it. Preview order, and then it's going to say, you sure you want to make this order? And you say, yeah, and that's it. You bought a call option. Let me know if this was helpful. Give me a like and subscribe if it was. If you have any questions, please leave them in the comments section below. And if you have a video you want made for you, for example, buying a put option or whatever, or if you have any questions regarding all of these details, some of the ones I didn't get into, for example, making a more complex trade or some of these other choices, just let me know, and I'll make a video. See you guys later.